Hello everyone, welcome to the daily analysis for GBP, JPY, April 17th, 2009. Time is currently 9:17 at GMT. Looking at a daily chart for the pound yen, there's really not a whole lot going on other than what I've already talked about pretty much the last week or so. We're still stuck in the range between 149.25 and 145.78 area, so for the most part, I'm going to actually stay on the sidelines until we do break this range. It's probably the safest thing to do. On the CCI for the daily chart, we do have a trend line that is clearly breaking it right now, but there's still a lot of time left in the day, and we still could bounce off of this line. So I'm going to be waiting for a break of 145.70, and especially a daily close below it, because as yesterday proved, we can break the range and still move below it. So I'm looking to go long on a break of 149.25, and look for a close above it. That one's a little far-fetched right now just because we're a couple hundred pips below it, whereas the 145.70 level is actually only about 100 pips away. So on a daily scale, that has a better chance of getting there right now. Moving on onto the 4-hour chart, you do see yesterday's swing low at 146.54. I'm not going to be trading a break of this just because we have been stuck in this range for so long. There's no clear solid support or resistance level that we should be looking at, because it could easily go to maybe 30 pips lower and then reverse from there. CCI wise, there's your bullish trend line that we're looking to break. For the bears, it was about an hour ago when the London Open happened. You could have grabbed 50 pips out of it maybe. So it's still a little bit undecided. Looking to just look to break the range, unless you see something very that looks really good to trade on the lower time frames, such as yesterday's channel that I talked about, which is right here. There we go, where we had 1, 2, 3, 4 highs that connected. It was a clear channel on the lower time frames, and here's a little zoom in on the half hour. And once we broke this range, it started the new daily trend where we moved up after we broke it. It was 150 pips higher for the day before reversing. So unless I see something that's really clear like this channel, I'm not going to be entering any short-term trades. The current half-hour candle looks like we might be forming another double bottom around yesterday's low, but not at yesterday's low. So this is exactly what I mean by I'm just going to be sitting on the sidelines and waiting for a much better setup, because the market's a little bit choppy right now, and it's moving up and down between our 200 pip range. So sorry if it's a little disappointing, but things like this happen in the market, and we just have to wait to see which way it breaks. And rule of thumb, it's better to be safe than sorry. So don't look to be in a trade just to be in a trade. The market is clearly not ready to go either way right now. So again, just wait for it to break. Thanks. Have a great day.